So today's video, I'm going to be talking to you guys about the process of buying a home and give you a step-by-step breakdown of everything you can look forward to when you are ready to buy a home. So for the first part, we're going to talk about, are you ready? So when you're talking about, are you ready? And I have some notes written down, so I look down. I have my little notepad here. So are you ready? You want to look at stable income. You want to look at, do you have a constant paycheck? Bi-weekly, once a month, when are you getting paid? If you're working off of a commission, so if you work in sales or something like that, you want to look at having 6 to 12 months of money basically saved, put aside, and ready, because that's something you want to, make sure that you have. If you're working off a commission basis, paycheck, it's a little different because that's constantly coming in, but you got to look at your life case by case basis and whatever your situation is. Next thing that you want to basically kind of map out for yourself is your debt to income ratio. Now, a lender is going to look at your debt to income ratio by looking at your monthly debt versus your gross income. Your monthly debt versus your gross income needs to be at least under 36%, I believe, of whatever is going on, because if it's above that, may cause issue for underwriting up in the future. So making sure it's under 36% and kind of mapping this stuff out beforehand to kind of give yourself a visual representation of whether you're ready for a home. And then lastly, looking at your credit. Now, everybody's credit is not perfect, understandable. There are different credit levels needed for different types of loans, so that's something you have to look at as well. But good credit offers better rates over the lifetime of the loan when it comes to paying for those costs, for those fees with the loan that you're getting. So the next part is affordability. I would say 100% most important step of seeing affordability is getting pre-approved. Now, being pre-approved is going to talk to your lender, getting some documentation together, making sure that you are ready. They give you basically the amount of money that you're kind of working in for your budget, and then it helps you get under contract faster. When you have a pre-approval letter and you look like a serious buyer, then most likely sellers are going to take you more seriously right off the bat. So getting pre-approved, and then also your housing cost should not be over 30% of your net income. Now, those again can vary, but just for playing it safe, 30% is a good number to stick with. Next is down payment percentage and closing costs. So down payment is a percentage that you're putting down towards the house. So usually most people it's between 3.5 to 20%. If you're going to put down 100%, that means you're just a cash buyer. You're just going to buy your house with cash. That's not everybody's situation, but that is an option. 0% down, you can get that by working with a VA or a USDA loan. The VA is a veterans loan, and USDA is for like rural areas, so kind of the outskirts of cities. Another factor that you want to consider when looking at homes is with that down payment, will you have to be enlisted into private mortgage insurance. PMI is basically insurance that protects the lender and the bank, that if you were to default or something were to happen, that they would still get their payments, because the risk is higher. The risk is higher for them if your credit is not as good, if your down payment is not as high. There's a risk in there for them. So you want to avoid PMI as much as possible, meaning you're wanting to have more available of a down payment to put down, because again, PMI is not anything to do with your principal or your interest that you're already paying. PMI, it's its own fee, it's additional money, and that's something that we don't want to do, is pay for extra things that we don't need. So PMI is something you should avoid by putting down more with your down payment, or as much as possible, at least 20%, and then you don't have to do all that. Closing cost, next thing. Closing costs usually range between 1 to 6% of the value of the home. So closing costs can include appraisal, title, closing costs or closing fees, and then banking fees as well. I'd say it's safe to put at least 3% down so that you have something, security away and ready to pay for those closing costs of whatever the value of the home is. Next is, after all of this, you want to make sure that you go ahead and get connected with a great realtor. A realtor is great because they can represent you, they can help you look through contracts, understand different components maybe that you don't understand. A realtor is usually compensated by the seller, usually 2 to 3%, depending on whatever they've discussed or what I've decided, and they would just absolutely love to help you and help you get into that first in your home. Next is the house hunt. So the house hunt is the most exciting part of the process because you're getting to look at everything, see what you're wanting, and see what you're looking for. So first thing is criteria. How many beds, how many baths, you want acreage, square foot, just breaking it down of what you're looking for is very important. So when you look at homes, you don't find yourself being like, I don't like this, I don't like this, I don't know why I'm even looking at this. It just really gives you a lot of guidance on what you need to look at and what works best for you. Now with that, you want to prioritize your wants and your needs. You want to make sure that you prioritize your wants and your needs together, so you know when you start getting sent houses that everybody's agreeing upon things. Priority list, I would highly recommend giving it to your realtor as well, so that they can find the properties that best suit you and are not wasting your time pretty much on looking at stuff that you're like, I don't even like this. So lastly, another tip is looking at the dollar per square foot perspective. Looking at a house, say maybe one area is like $175 per square foot, you're thinking, and then another one is like $205. Looking at it and said the neighborhoods are the same or pretty similar, being like, what is the difference? What is different about this? And what am I getting here? Why is this more expensive? Why is this less? And I'm paying for the same thing. So that's another big tip when looking at homes, to kind of see, what am I getting here? What am I doing? So yeah. Writing an offer. So in writing an offer, submit in writing what you're willing to pay, any contingencies on financing, all that good stuff. Earnest money as well is another factor to fact in there. Earnest money is good faith money that goes down towards your down payment and closing costs. Most people, or some people, start at about $1K and say, I'm serious about this house, I'm really wanting it. Now earnest money, there are times that earnest money is not returned back to you. Like say that your offer gets accepted and you drop out of the deal. Money, basically because they accepted your offer, they took their house off the market, you don't want it anymore, the money is then sometimes kept restitution towards them and taking their house off the market because you didn't want it now. So that's what earnest money is. And then that last point is going to be accepting, decline, or counteroffer. Accepting, you got your offer accepted, declined, they didn't want your offer, or counter, they like it, but there's some little factors that they want to talk about too. So that are the steps of making an offer. And the next is going to be inspection and appraisal. Difference between those two: inspection is look at all the components of the house to find issues. Appraisal is going to be when a certified appraiser comes in, looks at the house based on building value, comparables, all that stuff, and gives you an estimate of what the home is worth. Now those two things combined can give you bargaining power for negotiation. Because say inspector finds there's holes in the basement, there's a hole in the roof, things are leaking, there's radon everywhere. You can go to the seller and be like, look, this is not working for me, I need things fixed, or I'm not buying this house. So pretty much you can ask for discounts. Maybe you want a lower price because of all that's been found, you want it fixed, or maybe a credit that can be applied at closing. So these last two things are really, really important and can really help you when buying a home. Next is the final walkthrough. So the final walkthrough is making sure everything is back in its place. You know, the seller's moved out, you're looking at the house, you know, face value, do I like this? This is, you know, what I want. I would say take before and after pics maybe of what it was when you went to the showing, and then now what it looks like, you know, making sure that everything looks good. There's nothing new that has occurred between them moving out and now. And then also I would say have the seller give you a walkthrough of the home, kind of to show you all the specs and stuff like that, so you know exactly, you know, how everything works and don't have any crazy surprises. Have a full awareness of everything that this home has to offer. Then finally, we have made it to the closing table. So at the closing table, the lending party, or before the closing table, the lending party is going to give you a closing disclosure. This closing disclosure is going to list everything that you're going to need or everything that's expected of you at this closing table. Next, you want to make sure you review all your numbers, so making sure everything makes sense, that the numbers your lender gave you matches this closing disclosure, that you are getting exactly what you were promised and what you're looking for with this home loan. And then lastly, the settlement statement balances out to zero, and that everything you're paying for, you know exactly what you're paying for, and that what you agree to pay for is what you're paying for. So I hope that helped you guys understand the buying process of buying a home. If you have any more questions, feel free to reach out. My name is Dominique. All my contact information will be down below. If you are enjoying my videos and this is really helping you in your real estate, real estate journey. Please be sure to subscribe for more real estate content and also turn that notification bell on to get an update of every time that I post a new video. And also be sure to follow me on my Facebook business page, on my social media, Instagram, and then also TikTok. I love making this content for you guys, and I really hope it's helpful. If you have any suggestions or anything that you want to know more about, feel free to also comment down below, and I will be sure to make some videos for you guys. I hope you have a blessed and a wonderful day, and thank you so much for taking the time to watch this video. Bye.